Hello there, this is Imi from iTradeAims.net. I wasn't going to do this and I finished, but then I have this urge of explaining something, and I was taking screenshots and trying to do that. It kind of takes too much time, and I thought, okay, let's just do a quick review of the day. So today, let's go to the US30. Actually, let's go to the DAX. So in the morning, the DAX started here. Let's go to the hourly chart first, right? So that's our hourly chart. Used a level from here, used a level from there, connected these levels, went to the 5-minute chart. I'm going to go fast, okay? I hope you guys can catch up. Goes up, see, hits that level, goes down, hits that level. Not interested. It just keeps doing that level. I was looking at it on the 1-minute chart, but there just wasn't anything on it. Emma and I were commenting on this. I don't think there was anybody else. Anyway, so there was something here, but not really. There was this. This was setting up. I would not have taken it because I've already identified the level below it. And then there's kind of trend, bullish move. But these wicks kind of, interested me a little bit. But soon it was proven that it was just going sideways through that. And so that was the end of DAX. Meanwhile, looked at euro dollar, which was over here, and interestingly enough, it has a sideways trend. And that is, I really wanted to talk about this. That's why I'm making this video. So we have a trend over here, right? We can go to the daily chart, right? So over here, my thoughts are, the trend is kind of slowing down. Could it go up, right? But the better thought is that, when something's going somewhere, it will go further in that direction. But, it could have come back. But since we're looking at the market and it's going sideways in trading range, and we laughed about it, we joked about it. So, well, this is the situation we want. Like, if you compare this to the pound dollar, now the pound dollar was going up, and I asked a question in the chat room, and the answer obviously was that it is in a bullish channel, which could be like a bearish flag on a higher time frame, right? If you look at this like this, it's a pullback. If you look at the daily chart, we know that on the daily chart it's going really, really strongly down. So I do the top down approach. First thing I would look at is the daily chart, specifically for Forex. And if you look at this and then mark these levels, what you can see is, and this is one thing that I remember now, I want to mention on the daily chart. Every day I ask this question, like if I look at this candle, and I taught this technique to Jess and she was doing it for a while. You want to ask a question, where did it come from and where is it going? So over here we know that it's come from this level here. It was rejected there, but before that it came from there, right? Comes down, react to this level. This is this level. See previous levels, there's a bounce, so it has become now significant. When it was coming down, it did the retest here. So this itself is like a setup on an hourly chart. If you go down there, let's actually do that quickly. I don't want to take too long time. But if you look at this, breaks it, comes back. That's that setup for you over here. And that's the setup that we trade on the H1M5, right? Let's go to the daily again. And then, so on this day, you're thinking, okay, what is it going to do? Is it going to go below this? Let me mark that line. And that's what? That's Friday, the 12th. And you mark these levels, right? You know this level. And then the next day, it doesn't break it. And it continues to go sideways. So what do? You're thinking about, okay, it's not continuing further down. But where is it going? So when it rejects here, where is it going to go? It's going to be the next low of a candle that you have, which is this one. Didn't react to it. And then you look further behind that. So what was behind this was a pivot point where you have a support resistance here, and it's been retested here. So that, and it was retested here as well. So now you have a clear understanding that when price gets rejected here, it's going to go up there. So let's inspect that day. See, as soon as it comes to these levels, it slows down, doesn't go further down. Goes up, pulls back. Actually did take a trade here on the other account. That was a rent, and but I also took a trade on Australian dollar on a similar kind of setup. That one worked into 4.5%. So see this rejection, these previous levels, price comes here. So that's the idea. So when you know all of this, and then today I'm looking at it, it's kind of in that same zone. So I'm not really interested in this one. But if you compare this to euro dollar, in euro dollar you have still a breakout phase. It's like a slow tsunami, right? Because it's a daily chart, so you can do a lot of stuff on in this, inside this. Like it's a roar going on, but you're in a faster time frame. So the roar is going on and they're like raging, but you can slow it down for yourself. You go to the hourly chart and you can see it, that there's a strong move down, then it's a sideways market. And what I want is that I like ranges. I like tight trading range because, as usual, we want the breakout of it. Now, in the past, I would put a pending order here and stop loss up there and take the breakout. It's a setup one. I remember this, yeah. I posted this picture in Discord, and I asked the question, like, what do you think, Emma? And she was, it's a setup one, which means, you know, it's a wave 4. It's going sideways. So what do we need? We need a breakout. And that is that breakout. So if you're an active trader and you are always looking at the chart like myself, then you would immediately know that it's broken out. So you don't necessarily have to wait for the hourly chart. But if you are working or if you have other stuff going on and you only want to check the chart once an hour, then at the end of this candle, you're now active. You are very active now. You're looking at it. You know that now it's broken. Now it's a higher probability time. And then what you can do is that you can apply 2 time frames. You can either find it on the 15-minute chart or on the 5-minute chart. Now in this case, because it started going sideways and we didn't get a signal, if you at the same time check the 15-minute chart, you received a fantastic signal, a 1 and a 2. Now imagine if you have a pending order there, that's 10 stop loss, you're way out already with 2R. So these zones are there for you. This method that I found, this that I'm discussing, it's very, very high probability. I used to tell everyone to try it and I still say it. And then Emma tried it. I think it is not the DAX M1 or the US30 that helped her hit the challenge target. It's actually this. And she didn't do it all this year, but during the challenge she did it. And, you know, I used to say, look, this thing is giving me 80% win rate, because these are like very much cherry-picked, really high quality, high probability setups, and they're always there. But you have to be patient, right? Breaks out, pulls back. Now, because this is a doji, you're gonna get sideways market on the 5-minute chart, and once you have this sideways market, you don't want to trade this. But on the 15-minute chart, it's a setup. So that's one way of doing it. In many cases, when it breaks out here, it pulls back, it creates a setup on the 5-minute chart, and then you trade the next leg. What else is there? Dollar yen, not interested, is still sideways, so I have these zones there. Let's go to the daily chart. So you see the daily, after these strong weeks, it's just going sideways. So once it breaks those highs and stuff like that, then something will happen on this. Then we have the US30 on the daily. So this is interesting. Here we have trading range. It broke out there, and I was watching this. Now that is before the open. It kind of created the setup over here, but then didn't work. And then at the open, it was difficult. We were looking at the 1-minute chart, back and forth, US30 and NASDAQ. Over here, we have the zones and everything. It's ugly around this time. Around here, I was saying, okay, I want this low to be broken, then we talk about it. It came to it, goes back up. Even if you have a setup here, I'm not interested because of these levels. Then it comes down, starts to go up. We are willing, we're happy to take a trade here. But first of all, it's impulsive candles, and then it just didn't trigger. So we got away from it. Then it breaks around here. And then I'm thinking, okay, I have this level. Maybe if there's a good setup, I will take it. But there were too many wicks and we didn't get a signal anyway. Didn't take a trade. Then it breaks here. And then I'm thinking, okay, now if it pulls back and creates a nice setup, you probably take it. And then around this time, I soon realized This is not a breakout. Now it's a channel, and I don't like channels. I mean, channels are good, but they require a different type of trade management. Like, for example, if you go short here, you have to have your stop loss up there, and then you have to let it go. I mean, allow it to do its thing. Like, for example, a channel like this. And then when the channel breaks, when you have this first break, and then it retests it and fails, that now means that your channel is completely broken and the trend is now changing into a trading range. That's the power of that market cycle. So around here I just leave it, and then I'm on the 5-minute chart. I have my some alerts set up when I'm doing other stuff, and then suddenly I have feelers on, right? And as soon as I get these, I'm back on my desk. And I'm interested. And because I found that I make more money on US30, even though I was really keen to switch completely to US 100, and then when I started doing the stats, I found out that US 30 is actually more profitable for me. I was hating US 30, saying it's too violent, saying it's spiky, blah blah blah, but the stats say otherwise. But anyway, breaks out. I don't want to miss out. This is my FOMO kind of. You can't call it FOMO. I'm chasing, but I'm feeling the breakout, and I know that it has some more in it. And I can, see, this is my entry, and I got triggered here. So that's also the problem with these faster markets, right? And my heart is in my mouth at this time, because I don't want to pay all of this. But obviously, if it came here, you see, that's my stop loss. So that means my lot size was smaller, but I wanted to scalp it. And I put my target point, so got myself 24 points. So the stop loss is, 50 up there. It's not that I would have allowed it to hit it. If it started going up above this level, I would have gotten out. So what did I do here? This is my attempt of doing the micro pullback. So I have the breakout candle, and then as price starts to go below this close, I will hit the sell button. But in this case, I wanted to sell the low of this. And that was a mistake, because then, I had a, what's it called? Slippage. And well, I got it then. A few minutes later, I can see there's a rejection here. It pulls back up. Beautiful setup. I want to reinvest this money. This was like a 0.25%, and I put that back in there. No, this was 0.5%. So I got 0.5% there, and I put that 0.5% back in there, and I made another 1%. So that's 1.5%, 0.5% and then 1% on this. And the reason I have the target point here is that this is a very familiar pattern. When you have this breakout and this pullback, market will try these lows, and this is where those bulls or those stock traders would start buying again, because they have this thing they do. They would have bought here, they would have taken the profits there, they would have bought some more, they would have taken profit there, and then sold there, blah blah blah, and all that. And that's the end of the story. But the break and retest, this method over here, you really got to do it. And if you just have just a minute every hour that you can check, then just take signals like this. I know I don't have Australian dollar here, but let me just bring it. Here we go. That's the other account. So I took a trade on this here. 12 is the stop loss, and I took 50%, and then by mistake I hit 50% again. So basically I got out 75%, and then I thought, okay, well, let that be my level. And because it was going to close below the 10, I was going to get out anyway. There you go. I got myself a pretty good trade on this. So a trade was taken here as well on that day. So that's a -1. And so this I did not take, but if I took it, it would be a break even. Dollar yen, no trade yet. I wanted to take this, but I didn't because, these levels. So I ignored it. I could have taken this as well, but again, these levels. So I want it clean. I want it clear. Why Australian dollar then? Well, it's because of this. So you have this 3 candle move strong down, and then meet some levels here. And on the hourly chart, I can see this kind of situation going on, right? The channel, then the wedge kind of formation, then it breaks out and pulls back. But this is secondary information, and the daily secondary information. Most important information for me was impulse move, pull back, boom. There you go.